was at Wavemaker Labs, raised over $125 million, close to $150 million for our companies.
Kevin, it's great to see you. Welcome to we don't even have a name for this, but it's our Raise by Rally On kind of interview series where we interview experts in the equity crowdfunding space to help founders raise capital through equity crowdfunding. And so that means founders of companies doing equity crowdfunding raises, but it also means, leaders in the industry, service providers such as yourself. And so I'm really excited to chat. For those who don't know Kevin, he is the founder of Atlas Road, which is a full-service consultancy for equity crowdfunding for companies doing equity crowdfunding raises. He is a beast at raises and someone that has a lot of experience. This industry is young, and Kevin has a lot of experience in it. So I'm really excited to chat, learn kind of about your background, and get some strategies and tips for founders who are looking to do a raise and want to crush it.
Great. Yeah. Thanks, Alex, for having me. It's exciting to be on. And, I think before I give a bit about my background, I've experienced a lot in equity crowdfunding, been involved since almost day one in the US. And it's great to see more exposure to this way of fundraising to founders and entrepreneurs and the general public. So, I think it's only going to grow, and I'm just really passionate about the space. So my firm, Atlas Road, which I founded last year, is a full service consultancy, as you mentioned, for entrepreneurs, executives, founders that are looking to raise capital online. So whether that's sort of Regulation A, Regulation CF, Regulation D, I like to think of my firm as the sort of quarterback or the one-stop shop for raising capital. So if you are a founder that says, I think I want to raise money online, come to me. I can help take out all the guesswork. My company can take out all the guesswork and manage the full raise.
Okay, so you started Atlas Road a year ago, but the road to getting there is much longer than that. I'm curious, what makes you quarterbacking, leading a raise requires a lot of different skill sets, a lot of connections, a lot of different pieces of the puzzle to put together. So kind of how did you get to the founding of Atlas Road?
I got exposed to equity crowdfunding 2 companies ago. I was a co-founder, CFO, COO of a company called Distilled. It's an online apparel business. Think direct-to-consumer basics, focusing on denim. The company's now listed on NASDAQ, is publicly traded. And we were one of the first companies in the US to take advantage of equity crowdfunding. We were the first e-commerce business to do equity crowdfunding, the first one to do multiple raises. So I kind of got my beak wet there. It was still a very new industry. We raised about $9 million through equity crowdfunding, started on Seed Invest, which was recently purchased by Start Engine. And the thing that really struck me when I got into equity crowdfunding was the fact how similar equity crowdfunding was to e-commerce. Essentially, it's very similar. You're selling a product online. You're not selling jeans, you're selling shares. And there's a lot of similarities between the two. And so it came relatively easy to me. And we raised a number of rounds when I was at Distilled. I left Distilled about 4 years ago and ended up working for Wavemaker, which was an investor in Distilled. And I helped run Wavemaker Labs, which was the venture studio of Wavemaker. And our biggest thesis there at Wavemaker Labs was we're going to incubate companies, we'll inject them with initial capital, and then we'll use equity crowdfunding for follow-on raises. And Wavemaker Labs was very much focused on automating the entire food supply chain from seed to fork. So a lot of food robotics, ag robotics, companies like Paistro, Graze, Miso Robotics, Bobicino, Ally Robotics, very, very cool stuff. And so part of my role at Wavemaker Labs, in addition to being CFO and then later president, sort of running the business side of the venture studio, was to raise money. And so when I was at Wavemaker Labs, raised over $125 million, close to $150 million for our companies.
That's insane. Yeah.
Yeah. And listen, it helped to be focused on robotics. Robotics are cool and people like them, but again, had a lot of success there, learned a lot more. And it was interesting for me because I went from sort of managing one fundraise for one client, Distilled. I was the client, so sorry, for myself, then really getting a variety of deals. And so at Wavemaker Labs, I oversaw capital raises for over 10 companies. And that was over about 20, 25 different rounds, right? So each company might be raising 2, 3, 4 times. And so got a lot of reps in me, got a lot of exposure. And I think just gained an even better appreciation and passion for equity crowdfunding, which led me to launch Atlas Road last year and focus entirely on being the sort of quarterback and the advisor for people's raises. And I think I'm very unique because I've been in the seat of entrepreneurs, people watching this
Right.
podcast. I've been the CFO, the COO, the president, the co-founder. So I understand what it's like to run a business, but also raise capital for the business. And now it's very refreshing. And I found it very helpful for me to be on the other side, speaking with people, and I've been in their shoes. And so, yeah, it's always been a passion for mine. And again, as I mentioned, I'm a big believer in the space, and I only see growth and upside in the equity crowdfunding world.
Yeah. I think I learned a lot there, and I think that's fascinating, and it is, I think, so powerful. Of like you having been a company raising, and now you helping companies raise, and especially with all the success you've had, it's not just that you raised, but you did it at a really high level, and really high caliber, high level in terms of like the skill of the execution and the amount that was actually raised. I actually want to go back to like Distilled. Why did you? A lot of founders, I think that we meet a lot of founders when they're already in the equity crowdfunding like pipeline. They're gonna do it pretty much, but most companies that know about it are considering it, like they're not sure. Is this right for me? The industry has changed, of course, since like the very beginning. But why did you decide to do that so early on with Distilled?
I think for us, we saw an opportunity to raise money from our customers. And so when we launched, we were like, we had such a diverse customer base, about 60% male and the rest female. And again, Distilled was selling basic things. So in theory, we had a very diverse customer base. And we said, hey, why not try and hit up our customers as potential investors? And then also working with a platform like Seed Invest, market to their audience. And in theory, anyone over the age of 15 could also be a customer of us. So we kind of felt like it was this great altruism across investors becoming customers and customers becoming investors. And again, we needed to raise money. So we said, let's kill two birds with one stone. And again, had a lot of success with it. And, actually did minimal paid advertising, which we'll get into later. We didn't do a lot of paid advertising for Distilled's equity crowdfunding rounds because one, we had a large customer base and a large email list, so we could market that to them. And at the time we had worked with a Seed Invest who had a large and growing investor base. And so that $9 million was raised with kind of minimal marketing spend.
Awesome. Yeah. I think the world has definitely changed a bit these days in terms of how you market, but it's like that's still kind of, those are the companies who it's like it's the easiest for them is when they have that instilled customer base, but that doesn't mean that those are the only people that can't have a successful round, obviously. And that's kind of where we'll go. So you went to Wavemaker, and what's like cool, and we were recently talking, and I was like, I didn't realize I recognized you from the Paestro video, because obviously we're doing equity crowdfunding videos, and that was like a video that when we started doing this, it was like, do this, like make this, it was like, this one is a great video. And it's obviously super high quality, really shows off the product and the company in an incredible way. And so Wavemaker Wavemaker is also like a pioneer in the equity crowdfunding industry as well. What did you learn? You said it was $125 million that you raised, 10 companies through 25 rounds, like total rounds. What did you learn in that process? And how did things change over time? So like in terms of what worked, what didn't? Because I just want to be practical for founders who are looking to do a raise.
The first thing I learned is that you could have, and any founder could have a great business, great product they're selling, but not every product is set up for equity crowdfunding. I'm sorry, every business is set up for equity crowdfunding. Mm-hmm. Nor is a lot of, you could have a good business or a good company, a good product, but it needs some help to be able to make it set up for equity crowdfunding. So I'll give two examples. First of all, if you have a business that it's hard to explain it's hard to explain in one or two sentences, it may not be the right business for equity crowdfunding. Because you got to remember, if you're raising, let's say $10 million for a business and you want to raise it traditionally, you may have 100 meetings. Just throwing that out there. 30 minutes, hour meetings, there's back and forth, you're pitching, you're talking to investors, you're asking and answering questions. You don't have that luxury with equity crowdfunding. If you're raising $10 million, you could be pitching 1 million people, right? Programmatically, through ads, through press, through all sorts of channels. So you have to have a very succinct message. You have 30 seconds to pitch. And otherwise, if it doesn't make sense, they're going to click somewhere else. And so that's the first thing I sort of realize is you don't have as much time to tell the story for crowdfunding. So there's certain businesses that I've been pitched before, and I said, I don't think it works well for crowdfunding because it's such an esoteric, let's say, product, or the product pipeline is very not straightforward. So that's the first thing I've learned, having been exposed to so many deals the last few years. The other thing is that, and it's kind of related, is that a founder could have a good product and it may make sense, and I could explain it to you in a sentence or two, but it still needs that varnish. It needs that sort of storytelling element, and that means investing in the right content early on in the process, because you could have a good business that's easy to explain. So I'll use Graze as an example. So Graze has raised about $17 million through equity crowdfunding.
Graze is the
Yeah,
robotic lawnmower, the automatic
commercial
lawnmower.
autonomous
Yeah.
autonomous lawnmower, right? So one sentence, I got it, makes sense. But lawn mowing isn't the sort of sexiest industry, right? And
Mm-hmm.
there's companies that do well in equity crowdfunding have to have some sort of, sexiness isn't the right word, but sort of edginess or sort of like unique aspect to it. Lawn mowing's not that sort of fun to talk about. So when we launched a campaign, we sort of had a generic sort of basic video. This was in 2019. Didn't really perform well. We then brought in a more involved sort of creative agency and produced a series of videos that, for lack of a better term, made lawn mowing look really cool. We featured
Mm-hmm.
our CEO, John Valet, as sort of this like cool guy getting out of a Mustang, and with sort of making him the hero, and really just invested, paid a little more than maybe a normal founder would expect, but put together the right content, marketing content, video, images, and that had such a huge effect on our business. Because again, fundraising is marketing, right? Fundraising is sales. It's even more so the case through equity crowdfunding. Everything has to look good. You have to have a hook for people, and you could have a great business, but if you're not telling the story properly to the crowd, you're gonna fail in your fundraising efforts.
Amen. Amen. What we say, you said fundraising is marketing. We say fundraising is storytelling, right? Which is, you can kind of swap those words. It's like you need to tell a story. And I do think it's like hard to think about fundraising in this way. But as you said, you might be marketing to 1 million people. People are probably on their phone when they're coming across your raise, which is like very strange, right? For a founder to be like, wait a minute, like, because this is the most important thing, and this is an opportunity that's going to change your life. That's what a founder often thinks, because they're putting their heart and soul into this whole thing. But someone literally might be looking on it on the toilet. They might just be walking down the street, like crossing a road while they come across your investment. And so it's like, how do you get that person to pay attention to your raise that quickly and then become interested when this is still a weird thing to be advertised? Like, that's always a challenge, is like when we advertise something, we have to make it clear we're not advertising a product. We're advertising the security, the investment in the company, which is like when someone gets there, it's like if they haven't been exposed to equity crowdfunding, it's kind of a crazy thing.
Yeah, you're right. And I think that's the other area of the industry that I think needs more growth, is sort of the general public's awareness that you can invest in startups. I think people are familiar with Kickstarter, Indiegogo, right? That sort of traditional crowdfunding. But equity crowdfunding doesn't have that level of awareness. And you're right. It's like more and more people, of course, are seeing it. But yeah, you're seeing an ad on Instagram or Facebook, and they're marketing some widget, whatever, that you can buy on Amazon or where, anything. And then all of a sudden you see an ad for an investment. And, it's equity crowdfunding has opened up sort of venture capital style investments to the general public. And I think I'm pleasantly surprised how more prevalent it's becoming, and I want to see more of that.
So I want to go to what you shared, which is like, you made a video, because obviously, right, we make video. This is not a podcast about videos, but I'm curious because you have such a unique perspective and such an insider knowledge of this. You made a video for Graze in 2019, didn't work that well. Then you were like, let's amp this up. Let's really make something unique. Let's show off this company. Let's make it cool. It's like you basically made a commercial, right? As opposed to just like a video. What happened with that? And I'm also curious, how much do you think a company, I mean, it probably depends on how much you're raising, but like how much should a company invest in the story side of things? And story can be video, which is probably the most expensive just because of what goes into a video, but also the page itself, the paid media assets, whatever it is.
Yeah. And of course, there's people who want to raise $1 million through equity crowdfunding. There's people who want to raise 20 million. So obviously that
Yeah.
number changes. But, I'll give a good example that I learned from my co-founder at Distilled. And again, I was on the finance side, so I'd try and tighten the purse strings, and he'd say, "Hey, Kevin, I'd like to do a photo shoot for." I'm throwing out kind of made up numbers. I'd like to do a photo shoot. We have one photographer; it'll be $1,000. The other photographer will be $3,000. And I'd say, "Well, let's just do the $1,000 one." And he's like, "Well, the $3,000 guy is going to produce content images that look 10 times as good, and if we're going to use these ads, I mean, this content, these images." For ad spend, and we could be spending $100,000 one month on ad spend, like that content that costs $2,000 more, 3 times the price, is going to be much more effective on our ad spend. And in theory, and again, it's always hard to test this, but in theory, then the ads are going to perform better, and you may net out better if you had spent a little bit more in creative. The same thing goes with equity crowdfunding, and a lot of founders get into this not realizing how much money they may have to spend on marketing dollars, on advertising to promote the raise. Now, again, if you're a company that has hundreds of thousands of emails and hundreds of thousands of customers, you may not need to advertise as much. But a lot of companies need to spend ad dollars on social media, search, again, even things like press to promote the raise. You're better off not being stingy and investing in a bit better creative, or even investing in creative at all. I'm sorry, even investing in some creative to make those ad dollars work better for you. I've seen so many companies that aren't B2C, that are B2B, and have a product that they're using an image on their deal page. They're using an image on ads, and it's like something they shot on their iPhone. And even just hiring a good photographer, forget about video for a second, hiring a good photographer, injecting the right lighting, spending $500, $1,000, $2,000 is like, for a founder who's not a marketing person, or who's an engineer, who's a creative,
Yeah.
not a creative, but more of, let's say, a tech person, they're not used to that. And again, having come from ecom, I've learned that investing in the right content and assets up front are going to make your website and your ads perform better. And so it's like, well, let's say I'm trying to raise $20 million in a Reg A plus. Let's say you could be spending $4 million to raise 20, right? That's a
Wow.
5-to-1 ROAS.
Yeah.
Let's just throw that out there, right? And that's, we're seeing ROAS has come down a bit, ROAS, return on ad spend, because of the economy and everything. You're spending $4 million on ad spend. I think spending $100,000 on video and images throughout the campaign isn't that much money in the grand scheme of things.
Wow. Yeah.
Now you could do that on one video and one photo shoot, and that's your whole campaign. Or maybe you split it up and you say, all right, I'm going to spend half of that on the beginning, launch a video, launch some creative, and then 6 months later, when the round ends, I'll do another video that will not only be fresh creative, but maybe it will show some progress that the business has made or on its prototype, or on its deal flow during that period of time. So it's $100,000 for a founder of a B2B business that isn't used to spending money on marketing. Seems like a lot, but if you're spending hundreds of thousands, if not millions of dollars on ad spend, it kind of is a drop in the bucket.
I don't know how many people in this industry think that way. It's all about the return, right? Clearly, there's something going on with the quality of the content that drives results. And I think what you just said is really interesting. But of course, you need a bigger raise. We work with a lot of companies who are doing a CF, and their goal is $2 million. And we have options for that.
Yeah. The other thing I'll say is that there's most videos that I've sort of helped. Again, I've never. My firm, we're not producing the videos. We're sort of finding folks like yourself or other people in the market and sort of helping drive it and providing feedback. Most videos that I've had produced, they don't just have a pure investment message. We're not just talking about the investment opportunity. Mm-hmm. We are talking about the business and the product. Now, of course, we'll do cuts of it. We'll do pieces where there is a very clear call to action. Invest now. We've done videos where we actually talk about, like the Pystro video. Mm-hmm. We talked about equity crowdfunding. I actually talked about why Pystro did it. And you can edit that into the video. You can edit it out. You can split it up and have sort of snippets that you're either using on to your email list, you're promoting on ads. But the nice thing is, like, even if you have someone who's raising $2 million through Reg CF, if they're spending 25, 30K in a video, that's not just going to go for the investment round. They can use that on their website. They can use that to market to potential larger investors through traditional fundraising. They can use it for business development to try and find customers. Yeah. I can't tell you how many times, for all of the robotics companies, that I work for and raise for, that are all B2B, mostly B2B. There's kind of some one-offs there, that we've had people reach out to us, cold email us, not to invest, but for partnerships, for potential business opportunities, as potential customers. So there's a huge halo effect, one on
Yeah.
equity crowdfunding and marketing, the investment opportunity, but also the sort of production of the assets that you do for a fundraise are going to help the business overall. They're not just, you can't look at it as just for investment.
So I want to get out of the video side of things, and just like talk. We just kind of talked about what makes a company good for equity crowdfunding, and also one of the things that they can do to be really successful, which is really invest in the content and the story. What separates? Let's say a company could run a great campaign. They have the right pieces for it. What separates a great campaign from a good one, or even a failure? If they've got the type of product that could do well, they could have a great story. Yeah. What kind of drives them into the ground or to success?
Yeah, so a lot of things. It could be something like the valuation of the share price. You go out and maybe you have too high of a share price, too high of a valuation. That could cause you to fail. I've seen, and again, I've seen the good, the bad, and the ugly. I've seen sort of, you're going at too low a valuation and you think, well, maybe I should have gone at higher, gone at too high in valuation, the deal's price incorrectly. And it's tough to test for that. There are some ways to do it, but and that's something that, I've done many times and our firm can help advise on. There's things like that. There's the wrong class of stock. I've seen founders who failed because they were selling something maybe via a convertible note or a safe when maybe they should have done straight stock. The size of the round, right? Oftentimes founders will say, well, I need $30 million. So I'm going to launch a fundraise that says I need $30 million. $30 million, if you're a first-time issuer on equity crowdfunding, is a really high bar to overcome. And a lot of these fundraises, there's no incentive for an investor to invest in the beginning or in the middle of the round. Most of the money of these raises comes in the final month, the final week. And you may see, for example, 75% of a raise comes in the final month. 50% of the raise could come the final few days. And if you were
Sounds
going
very
out and saying,
stressful.
well, it is. Yeah. We could talk about that if you'd like. But if you say, now you may need $30 million, that's okay. But don't go out there and say, I'm going to raise 30 for your first round, because you'll just be in this sort of death spiral and you'll never make traction, because the investor base out there who's watching your deal and they're like, maybe I'll invest, maybe I'll not. There's no reason for them to invest early on, because you're not even near the sort of limit, right? Once you start to market a sense of urgency, 30 days left, 10 days left, 7 days left, final day, and you're also hitting milestones, getting closer to your goal, your funnel, your ad dollars, your audience will start to work a lot stronger for you. But if you're just kind of going out there and not really thinking through the whole campaign strategy, then I've seen founders sort of fail and fall flat on their faces. So instead of raising 30 at once, you say, well, let's break it up. Let's do 5 and then 10 and then maybe 15 after that, for example. Having the right sort of retargeting set up, email marketing set up. You could have great assets and have sort of great top of funnel numbers, prospecting, getting people in the door, but you're not following up with them properly. And some of that sort of things that agencies can help with and what we advise on, but even like not having the right investor relations or investor, sort of customer service on board. You got to think of it this way, Alex, right? Like equity crowdfunding deals, the average investment could be $1,000, $2,000, right? Name me one e-commerce website that has an AOV of $2,000. Probably Louis Vuitton.
Yeah.
Right.
Yeah.
And you can bet their customer service is top notch.
Mm-hmm.
Right. So why not take that sort of same mentality when you're setting up your equity crowdfunding campaign? Don't sort of be stingy on those sorts of things. So those are some of the things you got to think about. It's not just a good business. It's not just the good assets to tell the story. Now, of course, those are very, very important, but everything else has to be firing on all cylinders for you to have a successful raise.
We just worked with a company, Monogram Orthopedics, who had a very successful Reg A previously. They're aiming to list on NASDAQ now. And I was just looking, they're raising on self-hosted and they're actually raising on Republic. And I was looking at their Republic page and the CEO is in there commenting on every comment that people are asking, right? He's in there providing that service. People are asking questions and then I'm fairly certain it's him actually writing all of those answers. And, you know, it seems like that would be like a not that important. It's like, should the CEO really be spending their time in the comment section? But like for a raise, they actually should be, because you have no idea how much those people are going to invest. And for every question you answer, there's probably 50, 100, 1,000, 10,000 other people who are going to have that same question. And when they see that question answered by the founder, they're going to go ahead and invest. And that person probably would have just bounced otherwise.
Yeah, that's a great point. I mean, it's good to see that Ben's. It's great to see that Ben's in there. And yeah, you're right. It's probably not a ton of Ben's time, right? Because the answers come to him quickly. It shows to the folks on Republic, hey, the CEO is actively involved. And yeah, you're right. That content lives out there forever. So there's plenty of folks who aren't actually asking questions, but they're seeing the response. And yeah, I mean, that's also the thing of I've personally, having sort of been an officer of a lot of the companies I've raised for, I'm happy to get on the phone with prospective investors. Does it make sense for me to spend an hour on the phone with every sort of investor that comes through the door? No. But if someone, say, indicated interest and said, I may want to put 25K in, well, it's a good use of my time to speak with that prospective investor, build the relationship. And listen, if we're able to close that or a fraction of that, it's likely worth my time. And then, of course, you also supplement that with sort of other folks in the organization who may be able to answer questions, whether it's via email or it's via phone calls.
We're kind of touching on something, and I'm curious kind of what your insights are of like, who do you see as the people who are the equity crowdfunding investor? Like, who is that person who is watching a campaign? Like, how many of the people are kind of like, oh, see it and just like, okay, I'm in, this is cool, versus, oh, they're watching a campaign for 6, 7, 8 months, like waiting till the end. I'm actually very curious, like, who are the people who invest on the day before 9 months is up and the campaign's going to close the next day, but they've been interested for that long?
Yeah, I don't have offhand, I don't have a lot of stats on that, but I will say that when equity crowdfunding got started, you were seeing sort of mostly men investing, people 35, 40 and over, sort of middle class, upper middle class, who were okay to put $1,000, $2,000 into a deal. What you've seen recently, and you see this a lot on sort of Start Engine and WeFund and Republic, obviously a lot more diverse deals, but people are lowering their minimum investment threshold. So there's deals now that are $500 minimum investment, $1,000 minimum investment. You're targeting a different demographic on that, and so we've seen a sort of younger skew of investors recently. We had a company that I was involved with for quite some time, Bo Bacino, lower minimum investment, and we were seeing younger folks and more women investing, which is great to see. Again, when it launched, it was sort of this certain very obvious demographic was investing because it was $1,000, $2,000. But as the variety of deals expanded and sort of the economics of those deals changed, you get a lot more diverse investor base. The other thing I'll mention is that, and you brought up a really good point, most fundraisers are at least 2 months long. Sometimes they're 6, sometimes they're even longer. There's a lot of eyeballs in the deal. Most people don't invest until the end. And crowdfunding investors or prospective investors, they want to be told a story. They want to be told a narrative, right? When you're raising money traditionally, you're doing a long time pitching, but all of a sudden everything sort of like happens at once. You price the deal, there's a lead investor, and then the money falls in. With crowdfunding, it's a little longer process. And people who follow a deal and are exposed to the deal, let's say in the second week, they want to be showed updates. They want to see progress. And I kind of hinted on that earlier. You don't just want to launch a fundraise and not share any updates with the business. You want to advance the business in theory and share those because, again, they need to be told a narrative. And you're asking somebody to put in a few $100. Like it's not like a $25 widget you're selling online. Like it's a high average order size or a high ticket value for a crowdfund. They need to be wined and dined a bit. And so now again, most money comes at the end, but you're spending the first 2/3 of your campaign setting up the funnel, nurturing that funnel. You do get investments, of course, but it's really at the end when you sort of have that sense of urgency. You're hopefully hitting your limit and you're hopefully putting out sort of really exciting news. And it's that final week, those final 2 weeks where the bulk of the money comes in.
When a founder's like, I'm going to do an equity crowdfunding raise, I think like the founder's mindset towards how they approach things has a huge impact on the outcome of a raise. I've talked to a few founders that we've worked with, and like one campaign does phenomenally well and then another one doesn't. And I was like, hey, what happened here? And they were like, honestly, like I passed this off to like someone on my team who like it wasn't their full-time job and it was like just a part of their job. And I took my eye off the ball and it just didn't do well. How should founders be thinking about a raise when they're going into it?
Yeah. So the nice thing about equity crowdfunding, and again, I've raised money traditionally, mostly through equity crowdfunding, but I've raised money traditionally as well, is that equity crowdfunding can be delegated. The task of doing that can be delegated to someone else, whether it's a junior person in the company or a firm like mine or other agencies, or partially to someone in-house and then partially to a digital agency, so on and so forth. That's a nice thing about equity crowdfunding. The average investor in a crowdfunding round doesn't expect to speak with the CEO, right? Versus if the CEO is raising money traditionally, they're like, that's half their time. That could be their full-time job for a few months. So that's a nice thing about equity crowdfunding, is you can sort of delegate to someone else. But yeah, you're right. Like I've seen so many times, and again, I think even at Distilled, we were a bit we were successful. I think 9 million raised across a few rounds was great, but probably could have been even more successful if we had assigned one person in the company or hired somebody, insourced or outsourced, and said, your full-time job is managing this fundraise. You live and breathe it. And a lot of founders, to your point, they don't think about it, and they think, well, and they might have been sold, yeah, you can raise a lot of money through crowdfunding, and then they don't pre-plan the launch. It takes a while to get launched because there's an audit, there's sort of due diligence and those things, and then they sort of fall flat because there's not a deal quarterback. And that's obviously what we do, but it doesn't have to be with Atlas Road. Of course, I would love it to be, but you need somebody who lives and breathes the fundraise, because it's a what's the saying? It takes a village to raise capital.
Yeah. So I want to, in a moment, I want to talk about like exactly what Atlas Road does, but what are some of the things that trip founders up? I mean, you just mentioned like there's an audit that like will really slow things down and people weren't fully prepared for that. What are the pitfalls that founders and companies need to be aware of so that they can be prepared and go into this ready to go?
Yeah, I think there's and I've talked obviously a lot about things I've learned and certain pitfalls on the call. The three ones I'll probably highlight now is, one, it could take longer than you think to go live on your fundraise, because the review, the audit could take longer than expected. Or again, going back to that theme of the founders or the executive team are focused on running the business, and they just doing all the setup and the prep for the fundraise isn't their top priority, and so it just takes longer. And in theory, you could get around. I've done rounds where we've gotten it live in 30 days, but you need to have somebody who's living and breathing the fundraise to do that. So that's the first thing, is that they think that the fundraise will go live sooner than it actually does. The second thing I think is there's a lot of providers out there that haven't seen a lot of raises, and so they may talk to a founder and say, yeah, I think you could raise money on this much money at this return on ad spend, right? And in general, I haven't seen this with everyone, but I've heard a lot of cases where sort of somebody's overpromised what they think the potential of the raise could be. Now, again, as I mentioned, these raises, most of the money comes in at the end. It's hard to predict, but I know a lot of founders who've been told, yeah, I think you could raise this. They go live, and for a variety of reasons, they don't, they sort of fall flat on their face. And so I think there's a lot of companies out there that don't go in, eyes wide open, don't go in with all the information, and are very annoyed by the process when they go live and they're not seeing even a fraction of the results that they were told they would get. Yeah. And again, part of that I think is just the maturation of the industry, and it's going to continue to change. And again, I would like to think with my experience, sort of hopefully being able to level set more with folks, because I've seen everything, right? Everything in the spectrum. And then I think the third thing is with equity crowdfunding, there's this sort of tendency to, you don't have to really negotiate the valuation or the share price. It's kind of up to the founders. Now there's changes there. And so, the last thing you want to do is sort of go out at too high a valuation, because you get sort of this death spiral. And if you have a successful fundraise, you're naturally going to continue to ramp up your valuation too much. And you can do that, but you don't want to get too, overprice yourself too much, because who knows what's going to go on with the economy? Who knows what's going to go on with your business? So, I think that's the other thing is it can be easy to sort of ratchet that valuation up a lot
Yeah.
because it feels good. But there needs to be a balance there.
I want to hear about like exactly what Atlas Road does, and what you do for founders. When should they hire someone like Atlas Road?
So great question. In the way the way I've traditionally worked with companies and the way we work with companies is there's sort of three types of engagements. There's one where it's like a company needs help kind of setting the stage for the fundraise, getting to the point where it's live, and then there's sort of hands off and the company runs it, right? And that's the involvement of, and again, kind of going back to what we do, we'll do everything. We'll help source the sort of creative agency, the IR firm, the digital marketing agency, the platform or the portal or the broker, help negotiate all those. We'll help advise on all the deal terms, the investor perks. We draft the regulatory docs in conjunction with sort of the CEO and potentially outside counsel. We're kind of, we'll help pull all the strings to have your round live as soon as possible and also have it live and set up for the best success. The other thing that we do is we're happy to continue to manage the campaign throughout the fundraise. Now, what does that mean? We're not obviously the digital marketing agency that's pulling the levers on Facebook and Instagram, but we're meeting with that agency. We're managing that agency. I like to pride ourselves on the fact that a CEO or a founder of a business, if they work with us, they can be as involved or not as involved as they want. They can be involved whether it's 30 minutes a week. I have one client now where I give the president an update via text like twice a week, and that's it. And we're handling everything else. The other thing that I've gotten a lot recently is started to have some clients where they've already launched their fundraise, but they didn't sort of have the right advice or they didn't do things properly. And so that's a bit of a turnaround story, for lack of a better term, where we're saying, well, maybe we can't reprice the deal quite because the round is live, but let's see what we can do on recrafting the story. Let's maybe bring in a different agency. Let's try and do press. Let's try and focus on LinkedIn. So there's all those sorts of things that, again, having seen everything, and especially having come from e-commerce where, trying to come in sort of mid-raise and see if we can turn this thing around. I'm starting to see a lot more of that. But I guess sort of tying that up in a bow, the way we can have the most success is if we're there on day zero. We're literally there and a company's like, I want to equity crowdfund, help me with the process, and we will handle all of that. And if we're not doing it in-house, we'll find somebody and we'll help sort of manage that relationship.
Yeah, I think that's incredible. There's so much value to that, and I find, someone like yourself such a useful and part of the process because there's so much in a raise. I was talking to someone this morning, and I was like talking them through all the pieces of the puzzle of a raise, and they were just like, this is so much, because there is a degree of like marketing of like, you launch, you have a page, you have a video, and then you have $5 million in your bank account and like thousands of investors, right? Like there is kind of that feeling. And I think more and more that is changing and people are understanding like this is a real marketing campaign. This is the launch of something very significant in your business, and you need to treat it as, as with as much care as like the launch of your company.
Right.
Yeah. Right. And that's not totally always there, and which makes it a raise very challenging.
Yeah, I mean, I like to think of it this way. This is a bit of an extreme, but let's say I'm a doctor who founded a company and I have a cool med tech device, right? And I'm my focus and my training and everything is on medical. That's it. It'd be like asking that person, hey, you have a full-time job, by the way, you're running your business, but I want you, in order to crowdfund, I want you to set up an e-commerce website, right? And not only is it an e-commerce website, let's say but also it involves finance, audit, regulatory, right? All those sorts of things. It's not in their wheelhouse. It can be complicated, and it can be a bit of gibberish when you're talking to a founder and they may have a great business to fundraise for, but it's not in their wheelhouse. And if they don't know what they're doing, they can make a lot of mistakes and end up losing lots of time and money.
And we are here to help them avoid that.
Exactly.
So can you just tell me like exactly what does Atlas Road do for issuers?
Atlas Road partners with founders and executives to manage the entire fundraising process. We help guide them on the path to raising money online. And what does that mean? Well, we help oversee or manage everything from accounting finance, marketing, regulatory, investor relations, digital marketing, press. Think of us as the deal quarterback or the advisor for your capital raise. We take out all the guesswork for founders and help them focus on growing their business while we handle the capital raise.
I'm not asking for prices, but like how do you charge? Is there a way that you typically work with founders?
Yeah, so in general, we're not allowed to charge a percentage of the raise because we're not a broker dealer. So we tend to charge a sort of fixed fee per month engagement. Typically, a lot of our work is more upfront, so it tends to be sort of a higher price upfront, and then once the deal is live, it's more of a lower management fee. But that's typically how we work.
And what are some of the results that you've seen? I know Atlas Road is a young company. Like what's some of the results you've seen with the issuers you've worked with?
Yeah, I mean, again, I think obviously having transitioned out of my last role, continue to see a lot of success for some of the raises that are live now. Just closed the fundraise where the issuers now raised $17 million, almost $18 million total.
Wow.
Have another client that did a quick sort of $11 million round in sort of a six week period. So,
Really? Wow.
yeah. And again, that was a multiple time issuer, right? So you start to see this sort of effect. But, I do think given the economy, what we're seeing now is sort of lower average investment. Crowdfunding is still working, but lower average investment, when normally I would have said, well, maybe we'd expect to see a $2,000 average investment. Maybe it's $1,500 now. And I do think that will sort of improve. The other thing is sort of ad spend is still working, but maybe not scaling as much as possible. So an issuer might have expected a year ago to raise 5 million. Maybe that's only 3.5 million now. So starting, also trying to level set with founders and entrepreneurs. You could still raise, your company will still be successful in equity crowdfunding, but the sort of expectations have changed a little bit given the economic environment. But you're seeing that across the board in all capital raising, not just with equity crowdfunding. And one of the things I like to tell founders in equity crowdfunding is it's a very clear and defined path to raise money for your company. I can tell you, again, assuming there's no act of God or the financials aren't in a sort of mess, with a high degree of certainty, you'll be able to launch your fundraise in X months. And we think you're going to be able to bring in at least this much over that time period. Now, as I mentioned, 50 to 75% comes the final month, and it's hard to predict that. But equity crowdfunding is great because it provides a reliable path and a reliable timeline for founders to have some money come in the door. And it's hard to say that with traditional fundraising. I like to say that it takes the same amount of time to raise traditionally to raise $25,000 as it does $2.5 million, right? You got to kiss a lot of frogs, as they say, and sometimes you get lucky. Sometimes it could take a year to fundraise.
I'm sure a lot of founders really, that's like to be able to, it's obviously a estimate, but to use your kind of experience and knowledge to at least give them some guidance is probably, extremely valuable. Who's a great fit for Atlas Road? Like what types of companies are you looking for?
Yeah, right now I've kind of, as I mentioned earlier, in general, any company that sort of has a product that can be explained in sort of a few sentences is a great fit for equity crowdfunding. It can't be too esoteric of a product. So that's sort of like the first thing. From an Atlas Road perspective, I'm really looking to partner with founders and executives who are really good at what they do, and they're the founders. They've created their business, and they're so focused on running their business, and that's their. But they need capital. Startups need capital, and they're willing to sort of hand the wheel over to Atlas Road and trust us to manage the entire capital raising process. You don't want a founder who sort of has a lot of free time and is kind of sitting around, because that's not where I think we fit the best. We want to work with sort of passionate founders and CEOs, and a lot of the ones that we know together, that they live and breathe their business. They want a capital raise, but they want to partner with someone who knows how to do it best. And they've been around the block long enough to know, hey, I'm good at what I do, but I'm not really good at equity crowdfunding. Let's work with an expert, whether it's you or it's us, to handle what they're good at.
And is there a certain amount, like, do you work with companies who are raising any amount? Is someone who is trying to raise $1 million equally as good as someone who's trying to raise 17?
Yeah, so I'll work with folks who want to raise that 15 to 20 to $30 million on sort of a white label platform like a Dealmaker or an Issuance or someone like that. I'll also work with clients who want to raise half a million to a million on a funding portal like a Start Engine, a WeFund, or a Republic. Obviously, my sort of level of engagement is different, and the pricing reflects that. But yeah, we work with all sorts of types of issuers who are raising anywhere across the board. Because again, I've raised, all different size rounds across all different platforms. So, we've seen every sort of flavor variety of equity crowdfunding.
Awesome. I think what you do is tremendously valuable. I really respect what you have done and what you're doing, in the industry. And I think it's like weird for me, honestly, to be in like an industry that like feels small and like, this is like there's a set number of people, and like every individual person who like has any real presence has an impact on the entire industry in some way, shape, or form. And so it's like finding, the more people who are just like excellent at what they do and really good people to work with, like that helps everything, it helps everyone. To wrap this up, what are you most excited about in terms of the future of equity crowdfunding? Where do you see things going? What gets you jazzed up? Because you said you were excited about it before.
Yeah, I mean, obviously, just the fact that more and more founders are aware of it and they're asking about it, that's great to see. The challenge for me, and I like challenges, is that when this first launched, companies could raise a few $1 million and advertise on Facebook, Instagram, and Google, right? Like it was kind of like e-commerce 2.0. Like that was the ability to scale businesses. And my CAC's $30, my cost of customer acquisition is $30. I'm gonna have tens of millions of dollars in revenue off of that. Crowdfunding's seeing the same sort of maturation. You can't just rely, especially if you're raising a few $1 million or more, you can't just rely on the traditional social media channels as your only way of acquiring customers. So what I'm researching, I'm exploring, I'm testing out with my clients, with people in the spaces, other channels to promote equity crowdfunding too.
Mm-hmm.
I've been always a big believer in press. I mean, that's been a huge thesis of mine for all of my companies in the past. And, you can see a bunch of press hits for companies I've raised for. That's a big one. And that's still a big arrow in the quiver, but there's a lot of other ones out there too. And so I get excited about trying to find new channels to promote my clients' raises. And you got to iterate. And every client is its sort of own unique snowflake and has its own potential channel for acquiring new customers. And so I think that's what gets me excited, is trying to brainstorm and find new acquisition channels for investors beyond the sort of tried and true methods.
Awesome. Kevin, this is super helpful. I think you are a wealth of knowledge and experience here, and I think it's going to be incredibly valuable to founders who are looking to do an equity crowdfunding raise, and even for those who are in the midst of it. So thank you so much for hopping on, and I know I'll be talking to you very soon.
Yeah, thanks for having me. It was my pleasure.